Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, I'm going to be showing you guys what Canadian stocks I'm going to be buying during the current market dip in today's video. Like usual, we'll start the video with going through my portfolio. I'll give you guys an update on my portfolio. We'll talk about which stocks I'm buying as well as some stocks I bought for this month already. Then we'll finish up with the dividend income and I'll show you guys the total returns for all my stocks. And like usual, if you guys enjoyed this video and you guys want to support the channel, be sure to smash the like button and subscribe. Hey guys, what's up, how's it going? Welcome to the portfolio update of the video. In this part of the video, I'll give you guys a quick little overview of all of our portfolios here. So we'll start with the Wealth Simple Trade accounts. We have $115,000, went down a little bit over the last little while as we did see a bit of a dip in the US and the Canadian market. Talk about that throughout this video, but we have two accounts here. In the last video, I did make a big change. I moved a lot of the personal account into my TFSA to max it out. In today's video, I do have a little bit of leftover money that we're going to be kind of putting in there since I did have a limit on how much I could deposit, and we'll talk about that when I show you guys what stocks I'm buying today. But we'll do a quick little overview of all the accounts here. So the first account is going to be the TFSA. Has about $101,000, so we finally hit the $100,000 mark, and it's going pretty strong. The one-day return from today is up a little bit, so we did see a little bit of rise in the markets today. At the time of doing this video, it is March 14th, Tuesday. 1 week return from this account is down -4. So we've seen a -4 drop in the overall market, and the TFSA is highly focused on US stocks with Canadian stocks as well. So that's kind of basically both markets there. The 1 month return is down that -4%. 3 month return is kind of sitting at about neutral. So that kind of little jump up that we had at the start of the year is kind of basically not quite gone away completely. If you check like the overall return of the S&P 500 as well as like the Canadian markets as well, it's not quite completely gone away, but we did see a lot of that kind of disappear over the last little while. And the 1 year return is down -5%. All-time return, however, inside the TFSA is up 7%. And again, this includes dividends and everything. This is going to be total return for the entire account. If we switch it over to the personal account, which like I said, we did make some changes, and going forward into towards the end of the year, I am also going to be making some changes. The main goal for the personal account is probably going to move some of these stocks into my fiance's TFSA to max it out, and then I'll probably keep some of the ones that don't really matter, or some of the ones that are more long-term holds that quite haven't recovered yet. But we'll kind of see how things go. But once again, this is mostly focused on Canadian stocks with pretty much, I would say, emphasis on Canadian stocks for the dividend tax benefits and whatnot. But the 1 day return is up 1%. It should more or less be the same as our TFSA. The 1 week return is down -4. 3 month return is +4. An all-time return for the personal account is +3. So it's actually done a little bit better, and this is because we hold more Canadian stocks inside this portfolio. In the Canadian markets, I would say have actually had a bit better year than the US markets last year, and they're still doing okay. But that's a quick update on those two accounts. Quick little update on Track My Dividends as well to kind of get a bird's eye view of all of our accounts together. So this includes my ESSOP for my employer, which is a small holding. We have my personal account, which I already showed you guys. We have my TFSA, which I showed you guys as well. And then my fiance's TFSA as well, which is about $11,000 to $12,000. If we take all those accounts and add them together, we get $127,000 in total. So the overall portfolio dropped a little bit. I think it was like 131 or something in the last video we did, but that's because we did see a big drop in the market. Portfolio yield at the time of doing this video is about 4.09%. Yield of cost is 4%, and our annual income is $5,207, which is about, I would say, 480 or 70 monthly. I'm not too sure. You have to do the math on that, but it's something like that. And once again, guys, if you guys want to see all my stocks, you guys want to see all my holdings, check out the link to Blossom in the description of this video. You guys can see all my stocks as well as get all my stocks whenever I buy and sell them in real time as well. And here's my portfolio pie update on Blossom. You guys can see all my stocks in here. If you guys want to sign up, check out the link in the description of this video. But here's a quick little overview of how stocks happened for today. And as you guys can see, overall, most of our stocks are up quite a bit for today. But that's just kind of what's going on in the market today. But once again, check out Blossom if you guys want to see my entire portfolio. So the next part of the video is going to be focused on the stocks I'm actually buying today. So quick little recap here. If you go to the activity tab, we can scroll down here, and we've seen, I talked about this in my last video. I did do a big sell of a bunch of VDY inside my personal account. I'm just going to scroll down here. We can see I withdrawed about $5,000, and that went inside. That was from my personal account, put in my TFSA to max it out for the year. And we have about $500 left over since Wealthsimple does have a maximum amount how much you can take out. So we have about $500 here. We had to wait for that to go through, unfortunately. Kind of annoying. I'm used to the instant deposits, but when you use it all up, you have to wait for a couple business days for the deposits to go through. But anyways, we can put these in whatever you want. When it comes to the overall market, you can pretty much buy anything right now. I think all the all the stocks are pushed down pretty well. Like all the bank stocks, you know, they've actually went down quite a bit over the past little while. You could buy those stocks if you want. If you're worried about things like you don't think the banks are going to recover or some silly things like that, you could also just buy the index or a total market ETF or something like that. That's always going to be a good buy. In today's video, we're going to be doing what we usually do, which is buying the stocks we already have and having a nice balanced approach. So if you guys watch my video, I have been focusing on buying HYLD to bring out the passive income of the portfolio. And again, this is going to be inside the TFSA, so it's tax free. So I'm going to put about $100 into HYLD today. That's going to be the first stock I'm going to buy inside the TFSA. The second stocks we're going to be focusing on is some of the growth stocks inside our portfolio. And as you guys have noticed, I have been buying a lot of CNR. And CNR, I wanted to bring the position up to have a little more growth, but also get it to about that 3% range of inside my portfolio. So we have a little bit here. We have about $2,000. I kind of want to bring this up to be closer to $3,000 to max some of the other holdings I have. So CNR, we're going to buy a little bit today as well. I'm going to buy about, since the stocks are a little priced more, we'll buy 1 share of CNR. And then the other stock I'm going to be buying is going to be TD. So TD is also one of my big holdings as well. And with the bank stocks taking a bit of a dip and the overall market going down, I think anything long term you're looking to hold for the long term is going to be a good buy right now. In fact, I'm just going to look it up really quickly here. We see that over the past month or so, the stock is down 12%. So that's pretty significant. And if you're looking to buy the banks long term, like a lot of people have different opinions about this right now, whether the market's going to go down more, I don't know. Nobody really knows. But all I know is like this is a good buy, and if you're dollar cost averaging on a regular basis, this looks pretty good. Year to date, TD is down negative 7%, however, but still, I think it's a great time to buy. So if you want to buy some TD, definitely look at the banks. If you're kind of worried about buying individual banks, you could always look at an ETF like VDY or something as well, which is also what we're going to be putting some money in today. So go inside TD here. We see we have $200 left. I'm going to put about $100. Put about 1 share of TD here. This is going to be the bank. We'll put that through, and then the rest we're just going to put into our ETFs just to kind of have a nice balanced approach. Once again, just buy the overall market because the overall market is down quite a bit. So go back inside here, we have $156, and I'll probably just do a fractional buy unless it's pretty close. We'll just do a fractional buy, and then that will go through at the end of the day. So go fractional buy, we use up the last little money here, $156, and that'll be the stocks that I bought inside my TFSA for today. Next part of the video we're going to be looking at is the total return of all my holdings. So I'm on Wealthica, and this is the tool that I use since it automatically syncs with my Wealth Support Trade account. I don't really have to do anything. We can look at the total return of all the stocks I have here. I'll zoom in here so you guys can see really easily. Oop, that's a little bit too much. But you guys can see the total return of all my holdings here. I'm just going to zoom in a little bit more so you guys can see this pretty quickly here. We have the revenue here, which is the dividends, and we have the total gain in dollar amounts, and then we have the percentage here on the right side. So this percentage is going to be probably what you guys want to look at. But we can see here going down here, most of our stocks are kind of sitting at a neutral point. A lot of drops. If you've watched my previous videos, a lot of drops recently because once again the market went down quite a bit, especially like the overall markets, right? Like so VFE is down sitting at about 0% in terms of total gain. VDY went down a lot to 17%. We did sell a lot before the dip, but that doesn't really matter. I'm not too concerned about this. If we scroll to the right here, we can actually see the stock appreciation. So once again, I like to kind of always bring this up in my videos because a lot of people don't seem to understand that stock appreciation obviously matters, but also the dividend yields, especially if you have a dividend focused fund or a dividend stock or a good dividend growth stock, whatever it is, you have to factor that in here. So VFE stock appreciation is down about 2%, but with the dividends it's about 0%. So it is in the green. VDY with stock appreciation is only up 7.9% on my portfolio, but if we include the distributions, it's actually up 17, almost 18%. So it makes a big difference. Another example is HYLD, our big Hamilton funds that everybody likes to kind of have controversy over, down about negative 9 or 10% from stock appreciation, but with the dividends it is down only negative 5%, so it's not too bad. TD, same thing. ATD as well. AQN about negative 25%, so I've just been dollar cost averaging. In fact, I should have bought some more AQN today, but whatever, it's not a big deal. I've just been adding a little bit in here and there. CNR, we bought some more. We're sitting at nice just dollar cost averaging into CNR. I almost have it to where I want to be. Once again, just kind of bringing up some of the growth positions inside the portfolio. TELUS is kind of sitting normal. And some of these individual stocks like TELUS, Manulife, Fortis, even POW, I might trim these down since I do have them in my ETFs, and kind of just focus more on having a little less overlap, but I'm not too sure about that yet. That'll be more as the markets recover. I'll probably do that. Going down here towards the bottom, I also want to bring up HDIV. So HDIV is the other Hamilton fund we have, which is focused on the Canadian markets. This is about -3%, almost 4% in stock appreciation, but with the dividends, it's up about 0%, so it's sitting pretty neutral. And if we scroll to the bottom, you guys will see here that we have XEI, which is the iShares Canadian High Dividend Yield Fund. This is a brand new fund I'm buying with my covered call income that I don't use. So we have the covered call ETFs. Any leftover income I'm not using for whatever purpose in our lives kind of thing, we'll put into XEI to kind of help us just in case in the event, like a lot of people talk about, oh, you know, the capital depreciation of these funds. I don't think we have to worry about this, especially since the markets have dropped down and we're buying these funds at these low prices. So when the markets recover, we will get some capital growth. But in the event that that happens, or for whatever reason, we want to take a more balanced approach, we're taking the leftover yield from HDIV and HYLD and putting it into this growth fund, which nets us about 5% yield, as well as some stock appreciation. We're using it to buy back into the overall market, and that has about $92 in there so far, and we've seen about I guess 15 cents gain, which is about 0.17%. So when we add in the funds, the overall return of the covered call ETFs like HDIV and HYLD, we'll have to make sure we add this in there as well. But of course, that's going to be something that's going to go over the long term. But I just wanted to kind of clarify that for you guys in case anybody was wondering. So that's a quick little bird's eye view of the total return of all my stocks for this week. And just really quickly, guys, before we close out this video, I'll give you guys an update on the dividend incomes that we earned so far for this month, as well as our monthly totals since we first started investing. So going forward, at the start of the month, we had a dividend from Canadian Tire, which was $2. We had another dividend from Fortis, about $10. And then we got our monthly ETF dividend. So VDY, being our big Canadian monthly dividend ETF, gave us a dividend of $21 inside our personal account and $113 inside of our TFSA. And then we got some dividends from HYLD as well as HDIV for recovered calls. So HYLD gave us a dividend of $16 and then $65 inside our TFSA and our personal account. So that's about $70, $80 something there. And then HDIV gave us also about $10 or so in dividends. So once again, we took that money and we invested that into XEI since I didn't use it this month. But more or less, we are just kind of trying to rack up our dividends so we can compound them, grow. But also, if we ever need them income to pay for anything, we can also do that over time as well. And here's a quick little update on how our dividends have been growing since we first started investing. So I've been tracking the spreadsheet since we first started, and you know, it really started out with just a couple dollars, and we kept investing, kept growing. So once again, I like to kind of do this on a year-by-year basis. So January 1st, the very first month we started investing, we had 44 cents in dividends. So obviously not that much, but that's kind of where we started. Second year, month number 12, I guess month number 13 on January 2021, we made $37. So again, not a ton of money, but quite a bit of growth there. And then on year number 3, once again on January 2022, we hit $369. So again, some pretty significant dividend increases as well as some good stock growth as well. The portfolio is very much focused on growth. You know, and I've basically been doing as much as I can to throw all my money at my portfolio. Same with my fiance. I started including her portfolio in here too. We're really trying to get this to grow as much as possible. And then if we look at January 2023, which is the latest January month, we actually had $522. So it's been steadily growing. It's slowly getting there. It's still not like a ton of money, but you know, whenever you need money for little things, like whether it's to pay for groceries or to pay for expenses that come up, it can help you out. And you know, when the market's going up and down a lot, it's kind of hard to sometimes pull from your portfolio. But having that dividend income, that passive income, kind of just makes things a little bit easier. And that's kind of why we're focusing a small percentage of the portfolio on that. And our dividends for March 2023, which is the current month so far, is $268. And I think that's going to be most of the dividends for this month. We might have a couple trickle through towards the end of the month, which might bring it to about 300, but we'll see from there. And then in April, we're going to be getting some pretty nice dividends since we have a lot of our quarterly based ETFs and a lot of stocks paying as well. So April is going to be a pretty sweet month, but that's just the dividends since we first started investing and the dividends for March of 2023. Alright guys, that's it for today's video. I hope you guys enjoyed it. Like usual, if you guys enjoyed the video, please give it a big thumbs up. Take care. Hope you guys have yourself a good week. And if you guys have any questions or anything like that, feel free to leave them in the comments of the video, and I'll try to get back to you guys as quickly as possible. Take care, and I'll see you guys later.